Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is May 8th, 2025, and we're diving into Liberty Media's latest earnings report for the first quarter of 2025. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here today.
Thank you for having me. Liberty Media's report is quite comprehensive, and I'm excited to break it down for our viewers.
Revenue and profitability overview. Let's start with the top line. Liberty Media reported a revenue of $447 million for Q1 2025, which is a significant decrease from the $587 million reported in the same quarter last year. John, what are the key factors behind this decline?
The decline in revenue, about 24% year over year, is primarily due to a drop in Formula One revenue, which fell from $550 million to $400 million. This was partially offset by a slight increase in other revenue streams. Despite the revenue drop, Liberty Media managed to post net earnings of $22 million, thanks to realized and unrealized gains on financial instruments amounting to $82 million.
That's interesting. So even with an operating loss of $67 million, they managed to stay profitable at the net level?
Exactly. The gains on financial instruments played a crucial role in offsetting the operating loss, highlighting the importance of their investment strategy in this quarter.
EPS forecast and actual performance. Now let's talk about earnings per share. Analysts were forecasting an EPS of 18 cents, based on a survey of 3 analysts. However, Liberty Media reported an actual EPS of 5 cents. John, what does this tell us about the company's performance?
This is a significant beat against the forecast. The actual EPS of 5 cents indicates that Liberty Media outperformed expectations, largely due to their effective management of financial instruments and tax benefits, which contributed positively to their bottom line.
So despite the revenue challenges, they managed to deliver a positive surprise on the EPS front.
Absolutely. This performance showcases their ability to navigate through revenue pressures and still deliver value to shareholders.
Operational efficiencies and future outlook. Let's delve into their operational efficiencies. The cost of revenue was $286 million, and selling, general, and administrative expenses were $100 million. How is Liberty Media managing its operational costs?
Liberty Media has maintained a stable cost structure with only a slight increase in SG&A expenses compared to last year. This indicates a disciplined approach to cost management, which is crucial given the revenue decline. Their future outlook remains cautiously optimistic, focusing on strategic investments and maintaining stable debt levels.
And what about their debt management?
They have managed to keep their long-term debt relatively stable, which is a positive sign for their financial health. This stability allows them to focus on strategic growth opportunities without being overly burdened by debt.
Key takeaways. In summary, Liberty Media has shown resilience in the face of revenue challenges, delivering a positive EPS surprise and maintaining stable debt levels. John, any final thoughts on their investment prospects?
Liberty Media's ability to manage costs and leverage financial instruments effectively positions them well for future growth. Investors should keep an eye on their strategic initiatives and how they navigate the competitive landscape.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Liberty Media's performance in the comments below. Until next time.